Good morning, I'm Greg Ninnis for interest.co.nz, and today I'm talking to Olly Newland, who will be well known to many people as a property investor and author, and whose company Newland Burling advises people on property investment. One of the big features of the residential property market lately, Olly, has been the buoyancy that it's come back with since it quietened down a bit over Christmas. We've seen prices skyrocket, the latest REI and Z prices, and the market seems to have almost a bit of a frenzy about it. Where do you think it could go from here?
Well, I predicted the market would come back. When the rules came out last year or the year before, I said they'd be all over by lunchtime, and it's shown to be true. And where the market is going now is, unfortunately, I think it's continuing upwards, but there will be a day of reckoning. I've been saying that for a while. You can see it coming, and I can tell you exactly when it's going to come. It'll be the day when capital gains stop accumulating.
Yes.
It must come one day, and then people will start selling.
Right.
But when that day is, I'm not sure.
Okay. Presumably the ones who will start selling will be the ones who have bought investment properties rather than their own home.
Very likely. The investors will be the first to sell, because at the moment they're giggly. They all go around giggling about the money they're making. But when it slows down to no increase in value, and then the chore of collecting rents and repairs and doing lawns and throwing tenants out and getting new tenants will start to wear them down, and they'll think, well, they'd like to capture the capital gain they've made and put the property on the market together with thousands of others.
Right, so we will see a flood of properties all coming on at once, and at the same time the pool of potential buyers might dry out.
That's right.
So you get this.
But when this is going to happen, I'm not sure, but it will happen, that's for sure.
Okay, so is this just in Auckland, do you think? Could it happen elsewhere as well?
Unfortunately, it's spreading through the whole country. The Auckland contagion, because of the LVR rules and the deposit rules that came out a year or two ago, have made people jump over the fences into the other areas of the country, into Tauranga, Wellington and so forth, and Queenstown, and they're getting red hot too. So we've spread the Auckland contagion up and down the country, and this is becoming very dangerous. Right.
So anyone considering buying now needs to be aware of these risks, I would say.
Anybody buying now should have a decent amount of capital or backing or equity, and buy very, very carefully and not rely on capital gain. And be prepared that one day the capital gain will slow down and they'll have to be content to wait for the next round, which will come perhaps 10 years down the track or whatever. It's a long game, not a short game.
Okay. How much of the current sales activity do you think in Auckland anyway is being driven by investors?
Well, the statistics I've got is that in South Auckland, for instance, it's quite frightening. 80% of sales are to investors.
Right.
That means first-time buyers and the mums and dads and so forth haven't got a look in. Haven't got a show of buying it, because investors are buying everything that's coming up or selling to each other, flipping properties backwards and forwards to each other. And across the whole of the Auckland region, 41% of all sales are going to investors.
Right.
And again, it's not healthy.
And when I look at the prices and the rents that could be achieved, the yields they're getting looking very, very low. So they could be in quite a dangerous situation there with fairly limited free cash flow if prices or the market went into downturn.
That's right. And the number of people who come to us and our company, many of them are basically shoveling money into their investments to keep them afloat. And that's something that's all very nice when capital gain keeps on making you feel better, but when that capital gain slows down, it'll become a real pain.
So the rents aren't covering their outgoings
in many cases.
And they're having to put in from other income.
Yeah, they delude themselves. They say, oh, the rent is 4% return, but they forget about rates, they forget about insurance, repairs, vacancies and so forth. And when that's really added up and done properly and properly analysed, they're lucky if they're negative. And many times they're just breaking even.
Right. I mean, I remember looking at those sorts of things in the old blue chip schemes that were happened, 10 years ago or more now. Very similar sort of situation.
Yeah, some very similar situation. But I don't forget, I've been around for 55 years and I've seen this sort of market in the 60s. I know it goes back a long way. Exactly the same happened then. In the 70s, in the 60s it was the wool crisis, in the 70s it was the oil crisis, in the 80s it was the share market crisis, in the 90s it was the Asian crisis, and then the global financial crisis in 2000. I've seen it all before, and it has the same smell and the same pattern and the same result.
Right. So the warning bells are well and truly ringing.
Well and truly ringing, but nobody listens.
Okay. You've also got some interesting ideas on what should happen with the Residential Tenancy Act and tenancy agreement for people. What is your thinking there, Olly?
Because of so many people renting now and renting for life, to me the Residential Tenancies Act is now out of date. There's still a place for it for people who want to rent short term.
Yeah.
But there should be a revision of the Residential Tenancies Act so that people can rent for life or long periods of time, 50 years, 90 years or something like that, so they can call their home their home. And while they're in the home, they can live there in peace and quiet for 5, 10, 15 years, and they can sell that lease.
Right.
They can sell that lease, they assign the lease to somebody else and get money for it too. And the landlord can't object unless it's somebody terrible. And they have to also pay the rates and insurance and just like a commercial lease.
Okay.
And that way they can feel they're at home.
And presumably, like a commercial lease, there would be a mechanism for adjusting the rent.
Of course,
and so on.
A proper system, umpire and that sort of thing, not just any old number you can think of.
Right.
But the most important thing, it would give people security. They can pick a house in the area where the kids go to school and all that sort of thing. And that they know they can do the place up to their own taste. They know they've got a long-term tenancy, and the pressure to get out and buy something will be much reduced.
Okay. That could presumably open the door and make it more attractive for commercial entities to get involved in residential property as well, because we haven't had a lot of institutional investors in residential rental property.
Overseas, massive institutions buy massive housing areas and look after their tenants in most cases and give them these long leases. There are still a place for short-term leases, of course, but there are institutions that they're public and private who buy large residential blocks and give people tenancies for life and give them a fair go.
Do you think that could be a way of solving the affordable housing crisis? Because we're getting lots of expensive houses being built, nothing much affordable.
Yeah, if we could give people long-term tenancies so that they feel at home, then and know that they've got security, then I think we'd go a long way towards solving the housing crisis.
Great. That's an interesting idea. Thanks very much for coming in and sharing that with us today, Olly.